Nike just beat earnings after the bell. EPS came in at 20 cents versus expectations of 11. Revenue printed 10.97 billion against a 10.85 billion estimate. So on paper, guys, that's a clean beat. But why is the stock trading below 40 bucks after hours and threatening fresh 11-year lows? Guys, because the headline numbers aren't telling us the full story. And once you strip away what actually drove this quarter, the market's reaction starts to make a lot more sense. So let's start here with what Nike reported for fiscal Q4 2026. Okay, this is the quarter ending May 31st. Headline EPS came in at 20 cents versus the consensus of 11 cents. Revenue, like we said, 10.97 billion compared to expectations of 10.85 billion. Both major metrics beat. But almost immediately, investors started looking past the headlines. Guys, we saw the stock take a massive dump. I think it even almost touched 37. It's recovered a little bit since then, but it took a dump to 37. And according to MarketWatch, both profit and gross margins received a meaningful boost from the tariff refund. Guys, we covered this. We covered this in the earnings preview. The tariff refund clouded the earnings, right? This was a one-time government reimbursement, not an operational improvement. So remove that benefit and the earnings quality looks materially weaker. That's why the stock sold off despite the beat. If I pull up the chart here, you can see they reported the earnings, boom, right down to 37.04, and it's recovered nicely, like almost up to $40. But man, this reaction and then the conference call, and we can see Nike's not exactly sure where to go. The only thing we know is that we did break these fresh lows here at $40, and we are trading at 11-year lows. But let's talk about the underlying business first, then we'll get to the trade. Fourth quarter revenue declined 1% on a reported basis and 4% on a currency neutral basis. That's the cleaner way to measure the demand. And for the full fiscal year, Nike generated 46.4 billion in revenue. That was essentially flat year over year, or down 2% even after adjusting for currency. So guys, this remains a business that hasn't produced meaningful top line growth in years. And the chart reflects that. Like if we go out to the 10-year, we have this peak at 179, right, all the way back in 2021. And since then, it is a straight shot down to 40 bucks. But guys, there were some encouraging signs here. Wholesale revenue reached 6.6 billion during the quarter, which was up 4% year over year. And that's notable because Nike spent several years reducing wholesale exposure while pushing consumers towards its direct-to-consumer business. That strategy has shifted, and retail partners are now rebuilding their intimacy. Guys, they realized consumers are not going to go to them on the app or wherever. Their brand, although it's one of the most powerful brands in the world, if they don't stay in front of the consumer, they drift. They go to what's in front of them. They go to what's hot, what's trending. And by Nike going with, pulling their stuff off of Foot Locker shelves and basically disappearing from retail, we can see it in the chart. That was a terrible, terrible decision by management. But when we see wholesale numbers finally contributing again and growing year over year, that is a great sign that Nike is getting their retail footprint back and the sales are reflecting it. But guys, the biggest weakness we saw, and we talked about this in the preview, is China. The Wall Street Journal summed it up with a simple headline. Sales continue to decline as China weakness persists. And this is not going to be fixed in one quarter. Management described the operating environment as increasingly challenging while acknowledging that sell-through remains under pressure. So translate that into plain English. Product's not moving fast enough. And North America is also soft. International markets offsetting some of that weakness, but not enough to return the company to sustained growth. In leadership, like we said, they got that new CEO, still in its early turnaround effort. CEO Elliott Hill has now been in the role for only 9 months. And Bloomberg described these results as evidence the turnaround may be getting traction. And there is some improvement in the gross margin trend worth monitoring. But Nike's own earnings release characterized the quarter as in line with expectations, and management wasn't surprised. So guys, this is not a victory lap. However, guess what? Options don't care. Options just care if the stock could go up or down, and they price it accordingly. So there's always a trade. So here, if we look at the charts, right, we see Nike is way down at these lows, right? Let's go to the 4-hour because I've got the after hours turned on. Okay, we can see we wicked down all the way to 37.04. Okay, and then we went up. So guys, what I'm thinking is this doesn't have much more room to fall. Okay, it went down, it came back up. So for me, this is my trade, right here. I'm going to see how this opens up tomorrow because right now the market's closed. I'm going to keep an eye on this $37 level. In the preview, my trade that I gave you guys was selling a 37.5 put, which expires on Thursday. Now, you might, right after that release, you might be like, oh crap. But guess what? We came back up, and I think we're going to hold that, and that will be a profitable trade. So my trade moving forward, because Nike, and this is not financial advice, guys, right? Not financial advice. Because Nike wicked down to 37 and then came back up, the conference call provided a little bit of clarity. So we will revisit this tomorrow, but just looking at the chart and looking at the earnings report, I'm going to be looking at just selling another put, right? I'm probably going to be selling somewhere around a 37 if I can get some premium for it. And also based on the call, guys, we went down, right? So we could probably see if we could maybe this wick up 43. I don't know if we can even get premium at 46, but I'm going to be looking at that tomorrow. I'll do another Niking's post-earning trade only. This was more about the earnings recap. Tomorrow we'll more look at the chart and the chain. But those are the things I'm going to be looking at. Probably selling a put for sure. And then looking at the call side to see if anything makes sense, because based on this, I don't see Nike blasting out to new highs anytime soon. So guys, let me know what you think down in the comments, right? Nike as a business, is Elliott Hill's turnaround beginning to work? Or was this simply a low quality earnings beat because of the tariff revenue that bought the company another quarter? Guys, if you found this breakdown useful, make sure you hit like and hit subscribe, because I'm also coming out with the Nike post-earnings trade immediately tomorrow morning once the market opens. Sometimes, guys, we can see that elevated IDV for a couple days after the earnings report. So there's still a lot of juicy premium that we can sell and make some money even after we know what the stock is doing post-earnings. So be looking for that video. Hit like, hit subscribe. This is Luke with the Option Bomb, and I'll see you in the next one.